Have you ever felt like you were cursed when it came to investing? You buy in at the top and sell at the bottom, never quite timing it right? But what if I told you there's a scientific reason behind this? Turns out it's all about your emotions, specifically fear and greed. These two bad boys are responsible for wiping out countless portfolios, even in a bull market. And today, I'm going to tell you exactly how. Welcome to my channel, where we turn complex crypto topics into simple explainers that help you make smarter, more profitable investments. So let's start by answering a question I know you're dying to ask. How can I lose money when the overall market is going up? Well, here's the thing. Even in a bull market, prices go up and down, and it's what you do during those dips that matters most. Let's look at Bitcoin, for example. It was barely $10,000 at the start of 2021. Now imagine someone who invested $10,000 worth of Bitcoin in January. Now, let's meet our two unlucky investors, Alice and Bob. They both have $10,000 to invest in Bitcoin. Alice goes all in on January 2021, while Bob invests his $1,000 a month over the course of a year. In this scenario, Alice ends up with an impressive 550% return on her initial investment, while Bob enjoys a much more modest 40% return. That's a massive difference. But the real kicker is that both investors held through the whole year, and neither made any additional purchases. However, their end results couldn't be more different. What happened? Why did Alice do so much better? Simple. She timed it wrong. She bought at the peak before the price plummeted. But because she didn't add more during the dips, she missed out on the subsequent rallies. On the other hand, Bob bought high and low throughout the year, which may seem counterintuitive, but it's actually the key to success in crypto. He averaged out his buying price, increasing his chances of generating profit. This brings us back to the big question. Why do so many investors lose money even in a bull market? The answer often comes down to two powerful emotions: fear and greed. First up, let's talk about fear. Fear shows up when prices crash. It makes you think you've lost all your money, and it scares you out of the market. Imagine buying Bitcoin at $40,000, then panicking when it drops to $30,000, and finally selling at the bottom, only to see it recover to $50,000 later. It's a nightmare scenario, and yet it happens all the time. People make investment decisions based on fear instead of data and logic. Fear isn't just about paper losses. It keeps you from making the gains that come after a correction. Now let's look at the data. Since 2017, Bitcoin has seen 6 significant price drops of 40% or more. Ethereum has experienced 5 such drops, and Cardano has had 3. No matter how bullish the market is, corrections are inevitable. What separates successful investors from the rest is how they deal with fear. And now let's talk about greed. It's that feeling that drives you to make quick trades and chase unrealistic returns. Now picture this. You're in 2021 when altcoins are skyrocketing. Everyone's talking about 10x returns overnight. That's when you buy an altcoin at an all-time high expecting the same fast gains. But then the bubble pops, and your investment tanks. Suddenly, greed turns into regret. This is what many investors go through without realizing it. They get swept up in the excitement of easy money, and make impulsive decisions that hurt their portfolios in the long run. In 2021, Shiba Inu went on an insane rally, jumping from $0.00003.50 to $0.0001.34. That's a 100x in less than a month. It is easy to see how someone could get caught up in the hype and think they can replicate that with other coins. But as we've seen before, 99% of hyped coins end up going to zero. Now you might be wondering, why does greed have to be bad? After all, it led to some incredible profits in 2021. Well, it's all about balance. You want to be greedy when the market is ripe with opportunity, but avoid greed when it clouds your judgment and pushes you beyond reasonable limits. So let's take a look at what happens when greed and fear run wild. Think this story sounds familiar? It's a common tale of greed and fear destroying portfolios. Many investors chase potential high returns without understanding the risks. When the market dips, they panic sell, locking in their losses. Later, they regret not holding through the recovery. Now let's switch gears and dive into the psychology of greed and fear. Why do we fall for these traps? It's all about our brain. Our brain is hardwired to survive. It prioritizes avoiding pain over seeking pleasure. Losing money feels twice as painful as the joy of winning. That's why fear makes us sell off too early, and greed makes us take unnecessary risks. We want to squeeze out every last bit of profit, even if it means taking on more risk than we should. But here's the catch. Disciplined investors stay in control. They resist the urge to sell when prices drop and hold on to their investments, focusing on the long term instead of short-term wins. But fear and greed aren't always obvious. They can hide in plain sight, disguised as everyday experiences. Take being glued to your phone, for example. Every time a notification pops up, your brain releases dopamine, a chemical that makes you feel good. This creates a cycle that's hard to break, but it doesn't stop there. Social media feeds, text messages, even video games trigger the same response. Before you know it, you're spending way more time on your phone than you intended to. This constant stimulation affects your investment decisions, making you impulsive and reactive. Another sneaky trap is procrastination. It's that voice in the back of your head saying, I'll start tomorrow or I'll figure it out later. Procrastination tricks you into thinking you have time on your side, but in reality, it eats away at your progress. It prevents you from learning, growing, and staying ahead of the curve. The good news is that you have the power to overcome these challenges and emotions. The first step is awareness. Understand that fear and greed can creep up at any time and affect your decision making. Once you spot them, you can start to manage them. Develop a strategy that works for you. Whether it's dollar cost averaging, value investing, or something else, having a plan helps you stay on track. Remember, discipline is key. Don't let emotions dictate your investment moves. Think before you act, and always consider the long term. Lastly, keep learning. The world of crypto is constantly evolving. Stay updated on market trends, new technologies, and investment strategies. Knowledge is your best defense against fear and greed. That's all for today, folks. If you found this helpful, show us some love with a like and subscribe for more. See you next time.